A lot has happened in November on so many different fronts. We had a record-breaking Black Friday with 9.8 billion in online sales in the US, and Cyber Monday topped up even further with 12.4 billion in online sales in the US. These are absolutely crazy numbers, and what's really interesting is that most of the strong spending didn't come from higher prices, it came from new demand. And this is interesting as we're still grappling with a cost of living crisis. So this data suggests that the economy is extremely resilient, that consumer confidence is resilient, and that we're all still willing to spend when there's a good deal on the table. And this year's Black Friday and Cyber Monday had plenty of good deals with record discounts offered this year. And this strong consumer spending has also come at a time where inflation data is looking more positive, with slower than expected inflation numbers coming in the US, UK and Eurozone. US inflation is currently 3.2% at the time of recording, UK inflation is 4.6%, and Eurozone inflation is 2.4%. And in this video, we're going to explore how these movements have impacted the market, and particularly how they've impacted my InvestEngine portfolio, with a quick check-in on the performance of this portfolio. If you're new to the channel, I'm Alex, and on this channel, we like to talk about all things finance, with particular focus on how to grow your money. And if you'd like to follow my own personal finance journey with regular updates of my Monzo and InvestEngine portfolios, as well as a bunch of other personal finance videos, then I'd greatly appreciate a subscribe. But for this video, let's get into it. Before we take a look at my InvestEngine portfolio, we like to provide a reference point on how the market has generally performed. And let's use the S&P 500 to provide this reference point. We can see that the S&P had a really good month as expected, given what we discussed earlier. It's up by 8% over the past month, and this is really good performance. So hopefully my portfolio will also have good performance, given that a large proportion of the portfolio is exposed to US equities. So without further ado, let's take a look at how my portfolio has performed. And we can see that over the past month, my portfolio is up by 5.31% in percentage terms and £520.95 in pound terms. And the portfolio balance is now sitting at £10,167.44. So it's not as good as the performance of the S&P, but it's still a very good month relative to what we've been through this year, relative to the market over the past couple of years. So I'm happy with this. Before we analyse the performance of the portfolio with this graph and also looking at the individual ETFs, let's just switch tabs and take a look to see if I received any dividends over the past month. And we can see that I did receive some dividends. If I click on this bar here, the single bar, I can see that I received £20 in dividends from my HSBC MSCI World ETF. And this dividend was reinvested straight into my portfolio. So I didn't really see it, it didn't come to my bank, it went straight into the portfolio again. And now if we go back to the graph here, we can look at the performance over the past month and see how the portfolio evolved. If we take a look at the start of the period, which was the end of October, we can see at this point the portfolio wasn't doing too well in terms of performance. It was sitting at a value of around £9,177. But then at the start of November, there was a big improvement in performance. And as the month went on, between the start of the month to the middle of the month, there was a steady increase in the portfolio value. Then around the 14th, the 13th of November, there was a significant jump, and there's clear reasons why we're seeing this significant improvement around the 13th and 14th of November, as it was at this point that inflation data came in for the US. And of course we know that the inflation numbers were better than expected in the US. And the reason why these inflation numbers are important and why they've had an impact on my portfolio and the general market is because of their effect on market and investor sentiment. There's a strong belief that if inflation comes down to that 2% level or near enough that 2% level for long enough, that will mean the Fed no longer needs to increase interest rates again and can start thinking about bringing them down, which of course is very good news for the stock market, with lower borrowing costs enabling companies to grow more easily. And inflation coming down to nearer that 2% level is a very key enabler for the Fed to start thinking about bringing rates down, or at least not increasing them any further, as the sole purpose of the Fed increasing interest rates has been to reduce inflation and bring it back down to a long-term level of around 2%. So there's no surprise why we saw a big jump in the middle of the month when the inflation numbers came in. After the middle of the month, my portfolio stagnated for a few days. It stayed around £9,650. Then my usual £500 monthly deposit came in. Then at the end of the month, there was also some growth. There was some good performance at the end of the month to finish off November. And there was clear reasons for this as well. And it's also the topic of interest rates. One of the Fed policymakers, one of the most cautious Fed policymakers, Christopher Waller, signalled that interest rates probably won't need to rise any further and could even be cut if inflation continued to stay low. And this obviously gave investors positive sentiment and led to growth in the market at this point. However, we're not completely out of the woods in terms of the Fed's aggressive interest rate policy, as another cautious Fed official, Michelle Bauman, stated that further rate rises could be required if inflation is persistent. But nonetheless, the general feeling is that rate rises have peaked and the Fed will start thinking about interest rate cuts the second half of next year. So there's very much positive sentiment around inflation data and around where the interest rate policy will be the second half of next year, the second half of 2024. So now we can see the performance of my portfolio. We can see it's been a good month. Let's dig a bit deeper into how my individual ETFs have performed. And let's kick off as usual with the HSBC MSCI World. We can see that this ETF had a good month. It was up by 5.43% in percentage terms and £270 in pound terms. And it's not surprising that this ETF has done well for all the reasons we went through earlier. Nearly 70% of this ETF is made up of US equities, and there's clear reasons why US equities have done well in November. If we click on the ETF, we can see that over the past month that the graph of performance is very similar to my overall portfolio's graph. And this isn't surprising either, given that 55% of my portfolio is made up of this ETF, so of course it's going to have a huge impact on my overall portfolio performance. The next fund is the iShares MSCI Emerging Markets, and this is also up. It's up by 3.34% in percentage terms, and it's up for all the same reasons we went through earlier. But there's also another reason why this ETF has done well over the past month, as this ETF has a strong exposure to China, and a big factor why there's been negative sentiment towards China over the past few months, over the past year, is because of China's relationship with the US. And over the past month in November, there was a big stride forward in terms of that relationship between the US and China. The US and Chinese presidents both met in November, and the outcome of that meeting was very positive. The outcome was to resume military communication between China and the US in an effort to ease the tensions between these two superpowers. And this is a very important step to long-term cooperation, which is only a good thing for the markets, and it's particularly good for this emerging market ETF. So hopefully this cooperation continues as China opening itself up to developed markets and China being able to be a strong superpower in terms of trade superpower is very important for this ETF and for the general Chinese market to continue strong growth, or get back to strong growth, as they still are in the recovery phase from what happened in COVID. The next fund is the iShares MSCI World Small Cap. It's up by 5.45% over the past month, and this ETF has a particularly strong relationship with US interest rate policy, given that smaller firms rely on borrowing typically to grow. So if we click on the ETF and look at the performance over the past month, we can see that there was a huge jump when those inflation numbers came in around the 13th and 14th of November. And this shows the strong relationship this ETF has with the interest rate policy. So hopefully those inflation numbers continue to stay low and the Fed continues to move towards a policy of looking at reducing interest rates, as this will benefit this fund massively. The next ETF is iShares Physical Gold, and this was actually down over the past month. It was in the red by 1.29%. And this isn't too surprising given the relationship gold has and precious metals have with the stock market. Traditionally, gold is seen as a hedge towards the stock market. So when stocks and equity do well, gold typically doesn't do as well. So it's not surprising that gold hasn't done as well over the past month, given that stocks have done well. But if we zoom out a little bit further to the performance over the last 6 months, gold's in the green, and over the last year, gold's had good performance. So it's still been a good year for gold. The next fund is WisdomTree's Cloud Computing, and this is actually my best performing fund in November. It's up by 10.5%, so a really strong month for this ETF. And this is actually my favorite fund in my portfolio, so I'm happy it's doing well, as this is one of my passion sectors. Another passion sector for me is battery solutions, and this fund is also up. It's up by 5.51% over the past month. But unlike the cloud computing ETF, if we zoom out and look at the performance over the past 6 months, the last year, this ETF hasn't been doing too well. So I'm glad it's had a good month in November. So I'm hoping what we've seen in November will continue, as this ETF hasn't done too well. It's been my worst performing ETF over the past year. The final fund in my portfolio is iShares Physical Silver Fund, and this is also up over the past month. It's up by 5.24%, so good performance for this fund. So overall, it's been a good month for my portfolio and a good month for the general market. So let's hope this positive sentiment continues in December and into 2024. And I'm looking forward to hearing how your portfolios have performed in November too. If you want to check out the performance of my other portfolio, which I've just started with Monzo in one of their generic funds offered by BlackRock, then you can check it out with a video just here. If you click around here, you should be able to find it. But for this video, thanks for watching.